Let's talk about the market. I saw this question from a viewer last night that said, I'm nervous about the market if President Trump loses this election. Will the market collapse if President Trump loses? Well, the reason you think that is because the president keeps telling you that. Don't believe the hype. But here's the president. He's been tweeting about it all summer. He's been out at the podium during his campaign rallies saying it. Here he was with a tweet.
All right, this is pretty blunt. The president warning, you don't elect me, it's going to be a market crash. That's simple. Kadena.
The Trump economy is setting records and has a long way to go. However, if anyone but me takes over in 2020, I know the competition very well. There will be a market crash, the likes of which has not been seen before. Keep America great. Come on, man. Come on, man. Really?
Come on, man.
Give me a break. So, I was a presidential history major, and one of my best college professors was an excellent professor around American history, around United States presidential history. And one of the things that I learned and has always stuck with me is that the office of the presidency is very limited constitutionally. The presidency is really limited in its ability to do much. And we only really expected our presidents to come with a platform after FDR. Most presidents at the time, when they would run for office, would do like whistle-stop tours and they'd wave and they'd say hello. They didn't come with any kind of a platform. The American people didn't expect the president of the United States, the executor, to have any kind of a platform. That was Congress's job. After all, they're the legislative branch. So what are your plans for us? Are you going to build a railroad? Are you going to cut taxes? That's Congress. Now we expect our presidents to run. What are you going to do about immigration? What are you going to do about health care? Presidents are very weak. They can't do almost anything unless the houses of Congress are in their favor. So presidential leadership is trade, some executive action, and in the case of President Trump, being able to move markets with a few tweets here and there. But in large part, as Governor Huckabee once said to me, very little to do, if anything, with the economy. It's just the truth. Now, presidents will be blamed for a sagging economy if it's on their watch, and they'll be praised when it's booming if it's on their watch, as in the case of Bill Clinton. Right? It was booming under Bill Clinton. Then it was sagging under, it's sagging under President Trump, and he's being blamed for it. The truth is that there's very little the president can do to move the needle on this. But the market, let's talk specifically about the market. Because as he's been talking about the stock market booming under him, and the stock market's going to collapse if you don't elect me again. It's total garbage because look, we even just 2 days ago had a 400-point decline in the market. And I've covered politics for 20 years. And I've seen presidents who during boom times are praised, Democrats, Republicans. It doesn't matter what party. The market is party agnostic. The market does not follow the party. So if Joe Biden gets elected, this idea that the market is going to collapse because Joe Biden's elected is ridiculous. And if President Trump wins, that it's going to be fine is ridiculous. Or if Trump loses, all of that is garbage. Wall Street is already secure in the fact that Biden is not going to change anything. Biden is paid for just like Trump is, corporate donors, Republican Party, just like the Democratic Party, increasing defense budget by 20%. They're all part of one big corporate ball of wax. So Wall Street is already fine. They've already moved on and believe that Biden's going to win. What they care about is uncertainty. So the market is not going to collapse because Biden wins. But I will say the market is going to collapse regardless of who wins. That's an important point. And you can look at 4 different key data points. I've showed you these charts a little bit earlier this week. But in the context of what's going to unfold with the presidency, it's important to recall these data points. Over the next few months, we are going to hit a wall. Corporate debt is exploding. Businesses are taking on so much debt that they are not able to pay back and not paying it back. that they're hoping that the federal government will swoop in and bail them out. But the problem is that there's only so much money the federal government can print. There's only so much bailing out that they can do. And the Federal Reserve never got rid of their balance sheets from a few years ago in 2009. They kept all of that corporate debt. They didn't pay it back. They didn't eliminate it. They've just been adding to it. So there are a couple of key data points that I want to show you here. So if you're worried about Biden or Trump winning, there is a market collapse coming regardless. Now, I don't have a crystal ball to say that it's going to happen in 3 months or 5 months, but it is inevitable. It's inevitable. A couple of key data points. Right now, just look at the Buffett indicator, where the stock market is significantly overvalued according to the Buffett indicator, meaning currently at 184.2% on its valuation. Okay? That's why Warren Buffett has sold stocks like crazy and bought gold. That's why smart investors are getting out of the stock market. Here's the other key data point you should be looking at is this the Shiller price to earnings ratio index. Remember what I said the other day? A healthy stock market for buying stocks is about 15 to 16. Right now, it's at 31.86 is the price to earnings ratio. See Black Tuesday, what happened during the Depression? Black Monday, and then the collapse that follows. Thank you, Junior Torres, for your super chat. Then look at 2000.com bubble, burst in 2009. Now we are here at 31.86%. Again, if you get into the 20s, you should be selling stocks. Now that we're in the 30s, holy smokes. Now let's look at the public debt. How much debt do we have in this country? This is the federal debt as a percentage of GDP. Again, kind of chugging along here. Then 2008 hits. They add all that debt to their balance books, but never get rid of it. Now peaks again, and they just keep adding to the Federal Reserve debt amount. It's our public debt right there. How is that sustainable, folks? It's not. And then here's that corporate debt I was talking about. Look at that. See, just in the past few months, these corporations are not investing this into research and development and hiring people. No, they're buying their own shares back and artificially inflating the value of the stock and the stock market and enriching these executives. This is a travesty, folks. I mean, you just look at the Dow Jones. Where we've had these peaks, it's bounced back. I mean, look as we get, here's the dot-com bubble, goes to boom, down, then bounces back, right? But you always have this enormous growth before you have a collapse. And that's what we're seeing right now. The pandemic is, I really don't even think we should be looking at the pandemic as an issue in this. Because the pandemic hit in March, boom, and then bounced back right to where it was. Massive growth before a collapse. It always happens. So if we go back to President Trump saying that this is going to happen.
All right, this is pretty blunt. The president warning, you don't elect me, it's going to be a market crash. That's simple. Continue.
It's going to happen either way. The Trump economy. There is no such thing as a Trump economy. It's just how it is. This debt is unsustainable. So stop worrying about whether or not President Trump's going to be reelected could cause a market collapse. Wall Street is doing just fine at the moment. They're happier than a pig in you-know-what with this overinflated, artificially inflated stock market that's going to collapse regardless of who wins. Regardless. It's on the horizon. And, you might say, I saw someone comment the other day that, well, the Fed will just bail them out. They might, in part. But the problem is, again, when they bailed them out back here, they never got rid of the balance. See this here in 2009? The bailouts and the federal debt? The Federal Reserve doesn't have a lot of runway left to assume more debt. They only have a limited supply. They can only print so much money before we see massive inflation and corporate collapse. So, there's not a lot of room for this. So this idea that we can keep kicking the can down the street, it's inevitable. I mean, it's like climate change, right? You can only ignore it for so long before water levels start to rise. and cities start to go underwater, and hurricanes start to hit towns repeatedly in ways that they hadn't for 100 years. Wildfires keep coming. You can only ignore it for so long, and that's how I feel about the public debt. You don't have to take my word for it. Just look at all of the intelligent economists right now that are saying the same thing. And again, don't listen to what they say. Watch what they do. Warren Buffett encouraging you to stay in the stock market. What is he doing? He's getting out of the stock market, and he's buying gold and real estate. And he's, dumping on airline stocks and cutting off huge amounts of stocks that are on the cusp right now, repositioning into businesses that can survive this. Pay attention to what they do, not what they say. Smash that like button, folks. That's one thing you can pay attention to. When you smash that like button, it pushes us out into the YouTube algorithm, lets more people discover and build financial intelligence. And don't forget to subscribe to the channel. I should also mention, by the way, we have our daily Morning Invest newsletter. So every morning, it's delivered right to your inbox. It's totally free. Totally free for you to subscribe. You can read it in about 5 minutes. Just go to morninginvest.com. It's how you can subscribe. We add some humor to it. We cover the big business stories that I think are important to you that you're not going to see covered necessarily on CNBC and these other corporate news channels. They just care about the stock market. They care about their Wall Street friends. I care about the food on your table, stimulus, and the things that affect you and your family, which is what this show is all about. So thank you so much. Oh, a new feature I just want to tell you about. We just rolled out a new feature. So you can ask any kind of financial related questions you like. Should I refinance my house? I've got this debt. What should I do? I'd like to invest in real estate. How do I do it? Anything like that. Got a new feature. We just started. Go to morninginvest.com/Clayton, and that's how you can leave me a voicemail. So try to keep your voicemails to about 30 seconds, and then we'll play your voicemail here on the show. So here's how you can leave a voicemail. Say, hey, Clayton, this is Paula from Pennsylvania. I'm thinking about refinancing my house. I have this amount of money in the bank, etc. And try to keep your question to about 30 seconds. And then I will try to tackle those questions right here on the show. Again, morninginvest.com/Clayton is how you can leave us a 30-second voicemail message.